Good morning this Thursday, the 29th of June. I'm Grady Wolfe, a market analyst with Bell Direct. Australia's annual inflation rate fell faster than expected on an annual basis in May to a rise of 5.6% in the year to May 2023, below the expected rise of 6.1% and well below April's annual increase of 6.8%. In a major sign, the RBA's rate hikes are having a strong impact on cooling inflation down under. The most significant price rises were housing up 8.4%, food and non-alcoholic beverages up 7.9%, and furnishings, household equipment and services group up 6%. Offsetting the rise in CPI for the year to May 2023 was automotive fuel prices dropping 8%, which is a significant decline on the April reading of a positive or up 9.5%. The local market responded very positively to the release of the CPI data, with the ASX 200 closing the midweek session up 1.1%, led by a 2.14% surge in consumer discretionary stocks, a sector that has been beaten down in recent times due to higher interest rates restricting consumer spend on discretionary goods. Over in New York on Wednesday, it was a mixed session as investors responded to comments made by Federal Reserve Chair Jerome Powell regarding the need for further tightening of monetary policy. Powell said on Wednesday that more restrictive policy is still to come as inflation remains above the target of 2%. Chip stocks in the US took a hit on Wednesday after the Wall Street Journal reported the US was considering new export restrictions to China, which is a major market for chipmakers in the US. On Wednesday, the Dow Jones closed the session down 0.22%, the S&P 500 fell just 0.04%, and the tech-heavy Nasdaq rose 0.27%. Over in Europe, markets closed higher on Wednesday as investors in the region closely monitored further comments made by central bankers and officials at the European Central Banking Conference in Portugal. Bank of England Governor Andrew Bailey defended the Bank of England's decision to hike rates by 50 basis points last week, while the overall message for the conference remains focused on higher for longer. The Stoxx 600 rose 0.7%, Germany's DAX rose 0.64%, the French CAC added almost 1%, and in the UK, the FTSE 100 rose 0.52% on Wednesday. On the commodities front this morning, oil has rebounded to trade 2.75% higher at $69.56 a barrel. Coal is up 1.91% at $127.90 a tonne. Gold is down 0.32% at $1,907 an ounce, and iron ore is up 2.67% at $115.50 a tonne. Japan's consumer confidence data for June is out this afternoon, with consensus expecting a rise of 0.2 points to 36.2 points as the economy continues recovering from pandemic-related disruptions. One Aussie dollar is buying 66 US cents, 95.31 Japanese yen, 52.48 British pence, and 1 New Zealand dollar and 9 cents. Stocks trading ex-dividend today include Stockland, Transurban Group, APA Group, and GPT Group. If you've been thinking about these stocks, it might be worth considering buying in today, as stocks trading ex-dividend generally trade lower on the ex-dividend date. Ahead of the local trading session here in Australia, the SPI futures are anticipating the local index to open 0.07% lower following a weaker session on Wall Street overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has initiated coverage of CSR with a hold rating and a price target of $5.60, noting the diversified manufacturing company boasts sector-leading performance with operations in building products, aluminium and property development. The hold rating is due to CSR's addressable market and backlog from the work on the home builder nearing conclusion, signalling the building products division of CSR approaches the back end of its pricing cycle. Bell Potter is attracted to the long-term market share opportunity for Hebel in Australia and tailwind supporting CSR's property portfolio. And Bell Potter has increased the price target on PointsBet from $2 to $2.25 and maintained a speculative buy rating on the sports betting company after the announcement that Fanatics Betting and Gaming has increased its offer for PointsBet's US business from $150 million to $225 million in cash. DraftKings was in the running to buy the American operations, however failed to finalise a binding offer by 6 p.m. on Tuesday, so the PointsBet's board is recommending the increased Fanatics offer given its superiority in both terms of pricing and certainty. And that's all we have time for today. Have a fantastic Thursday and happy investing.